Good morning, good afternoon, good evening, FF family. Today is Monday, July 14th, episode 26 of the Freedom Finances podcast. Today's episode, we got our stock draft final results. This is going to be awesome. I'm excited for this. It is the beginning of July. It's our first episode back, and we have some what-if scenarios to follow. So I appreciate everyone being here today. My name is Dylan. I am also accompanied with Bradley and Nick as usual. First, gentlemen, as always, I want to talk about something good going on in our lives before we get this started. So, Nick, I'm going to start with you first. What's going good?
I just recently got a Switch 2.
Okay.
And I've played Fortnite on it pretty much is the only thing I've done. So
I purchased a new console to play a free game that I could play on the other console. All right.
They did give me a free skin for playing it on the Switch, which I thought was kind of cool. So yeah, there's that. So that was that's been fun.
Nice.
All right, perfect. Bradley, what you got going on?
Just got back from Vegas. In 2 days is Carrie and I our 15th anniversary. So we went a little bit early just because it worked for the work schedule and everything. But yeah, 15-year anniversary for Carrie and I.
Do you have anything else planned besides the vacation, or just the rest of the week's fine?
Other than going to Vegas?
Yeah.
No, she did take 2 weeks off, so she's off this week. We couldn't go this week because of everything. So, but yeah,
that makes sense. All right, fantastic. I'm proud of you too.
Thanks.
For me, I have officially caught up to the English dub of One Piece. So 1,100 episodes down. I have completely caught up as far as that goes. If anyone knows, it's actually in the 25 years of this show, it actually caught up to the sub of the Japanese version. So we are pretty close to that. Right now, they're behind a few episodes. But
so wait, you watched 1,100 episodes of One Piece? Did I hear that right?
I think minus 20 episodes of filler. Yeah.
In like what? Less than a year?
It took me 7 months. Yes.
And how long are these episodes?
20 minutes.
Okay.
Yeah. Yeah, they're not hours. We're not that far. That'd be crazy. Come on. Fantastic show. I think my feelings so far, because it's still going on, like it's in its final arc, which should mean that it is probably 500 episodes left ish. Actually,
that's it.
Yeah, actually, yeah. And you can tell it's crazy. I know it seems like a big meme, but this show is rapidly resolving a lot of things that are going on, and just things about the world you never know you needed to know. And I'm pretty sure it's gonna end pretty soon. So that's crazy. It's a good show. I think it's probably one of my favorite, if not the best show ever made. And that's saying a lot. So it makes sense to me. I can tell Bradley's really interested in this. So I appreciate everybody so much for hearing me ramble. And we're going to go into the stock draft. Appreciate you all putting this together. Thank you for being good sports. I know Bradley was not overzealous at all in his results each week. He was very humble and very much so the leader in this that we needed. So appreciate that. Yes. Who's going first? Let's see. I don't want to give it away. So we're going to start with Bradley on this one. Bradley. Before we go into it, for everyone that doesn't know through stock draft, each week we started this draft where we had each one of these gentlemen give $100,000 to stocks in their portfolio that they created. And the goal of this was to see who would get the most profit after the final results of either the amount of stocks went up and dividends at the end of this journey. Bradley, out of $100,000, you are currently sitting at a positive of 6.21%, totaling $106,214.75. Congratulations. Awesome. Your biggest winner was Ford at positive 28%, almost 29%. Your biggest loser was Tesla with almost negative 6%. What's going on with the Ford? Why was Ford so successful for you?
I'm going to skip to Tesla real quick because Nick and I were having a conversation. One thing that I've learned is it is awesome when Elon and Trump have go at it. You can
the girls
buy
are
Tesla
fighting right now
on discount. And literally Nick and I, it was like last weekend, I was like, hey, I think Tesla's going to be on discount Monday when the stock market opens because they're like going at it. dropped down to like 290. So bought some Tesla for cheap and then rose back up. So what I can say is like Tesla, like, hey, the more they go at it, as long as they resolve it in the end, right? Whatever they're fighting about, so the stocks can go back up. But when they fight, stocks go down. I love it, right? I love it. But Ford's looking good. I think Ford has kind of been like the big American company. I know Tesla says like they're American company too, but like they've been like the big American company to at least in public embrace like the American agenda of like manufacturing here in the US and ramping up, hiring in places like that. I know they've shut some places down, opened some places, but right now it's looking pretty good, and they have a pretty sweet dividend, which I didn't make a lot of money on, but maybe in the future, because didn't they drop their dividend like right when we started this to like
I thought so.
0.2%?
We talked about that. Yeah, because we had talked about that.
Yeah.
What was the term for like good dividend stocks?
Dividend
King
aristocrat.
aristocrats.
Yeah.
Yeah. Yep. Yeah, that was that conversation we had. All right. Before you give too much away, is there anything else you want to give about Tesla and Ford or something separate for those before we continue?
Not for those two now.
Okay, perfect. So before results, because I want to go deeper on this, Nick, you at the start of this 100,000, same as Bradley. Currently, right now, you're at $103,000, $103,525.54 at a positive 3.53%. So officially with that, Bradley, you have won the stock draft. Thank you so much for your
I
participation.
know. I'm surprised too.
And as always, he's so humble. We love to see it. Nick, before we go into some my questions I have for both of you, I'm going to go into your biggest winner. So in the end, your biggest winner was Netflix at a positive almost 19%. Close second is Bitcoin at a positive almost 18.5%. Your biggest loser is Starbucks, negative 21%. It was funny when we started this, I felt like we were on the mindset that you're like the Netflixes, the tech stocks, those were your worst, and it seems like Netflix kind of rose to the fame here. So let's start there. Why is Netflix doing so well?
Yeah, I think when we started talking about it, they were making those decisions on like poking the eye for customers, but long-term profit and stuff. And I honestly, I think it's just kind of come to fruition a little bit. Netflix had a good business model. They still do. They're investing in the right places. They're cutting back where they need to. And I think, they've shown the value there. It was definitely a blue chip stock when I got into it. It wasn't anything like sexy or exciting, but it seemed like they did pretty well during this. So I'm glad I scooped that one up when I did. So.
Hey, that was a good call on there because it was close to Bitcoin, which Bitcoin we kind of wasn't a stumbler at the beginning for you as well because it was part of that stock thing.
I think it dropped
like everything else.
Yeah, and it's funny because I talk mad trash on Bitcoin all the time, and it's one of my best. It just goes to show you that nobody knows what's going to happen, and so you got to diversify. But Bitcoin's been an interesting thing to see, and there's a lot of critics on both sides of the aisle, but it's been doing pretty dang good. I think it's up today even to what 120. Or 123. I think it hit at one point. New all-time record high. So for something that's nothing, that's pretty good.
Yeah,
that's pretty fantastic.
One thing I'll call out with Nick's is he had $1,700 in dividends, and I had $1,200 in dividends. So I think Pfizer pays one heck of a dividend. I think it was like something like a huge yield, like 7% or something, and it got you a lot of cash. So
I like dividend stocks. I'm not going to lie. Although I don't know if it overall comes out to more. I do enjoy getting paid out dividends. That does make me happy. So
yeah,
I don't know why you've never mentioned that before in any of our episodes.
I know, right?
Or the articles you write or anything daily. No, it's weird. All right, Starbucks. Any insight onto just honestly the biggest loser in there for you?
Yeah, I think that Starbucks, maybe I bet on it because I've got like the inside scoop with my daughter working there. And, I don't know what is going on with old Starbucks, if I'm being honest with you. But they're just not, I think they focused on the wrong things. They really put a lot of time and energy into those uniforms and didn't really focus on the operational side of things. So yeah, not a good pick on that one. I think I bet on the wrong horse. I also think we picked stocks at probably the height and before things started to drop, and so I think Starbucks got hit particularly hard. And if you look since April, they've kind of slowly been trending upwards. But we'll see if they can recover back to. I think they're only at like what $10 away from where we started at. So I think they can get there, but it's just been a little bit slower than some of the other stocks.
So with the with the inside scoop there, so she's like up there in the company then, your daughter?
Yeah, I think she's just like 17 positions below the CEO.
It's just her boss's
Yes.
boss.
Yeah,
assistant to the that makes sense.
Twice removed. Yeah.
Yeah. All right, that makes sense. Perfect. All right, inside scoop, by the way. So one thing I do want to cap off with this, Nick, for your side of things. If you were to change something from the beginning of this, so one thing, for example, you mentioned it being the height. So was this, I mean, hindsight's 2020, right? But do you think this is, if you're doing this again in the real world and you were actually investing in this, Nick would have been like, okay, so I did this stock draft and I know during this time it was bad. As far as the height goes, should I have waited longer? So that's my question to you. Do you wait longer in the future, or do you think this was just a bad time? What do you think?
Yeah, so obviously not financial advice by any means, but I think for me personally, I mentioned a couple of times on our show that price to earnings ratio for the S&P 500 was getting higher and higher and higher, and it was due for a correction. And so for like me on the personal investing side, I did wait. I was waiting for some sort of a drawback, I wouldn't say a crash, but like some sort of a correction before I go and buy things. I think that's a risk. Right. I'm probably more of a bearish investor, thinking things are more likely to crash. And so I'm going to invest in that way. So I think if I was going to do anything different, I probably would have been a little bit more conservative. I think if I compare it to what I really did, I did put things more in like cash accounts and stuff like that, and then wait for buying opportunities and slowly, I don't think I would ever recommend to anybody to go and just drop 100K into a bunch of random stocks at one time. I would probably say like do it in waves. You know what I mean? Even with a crash, because you don't know when the bottom is, you know what I mean? So like if it drops, buy a little bit. If it drops again, then buy you got to keeping cash on hand to be able to buy the dip. If you pour 100 grand in there and it drops, you have no more cash to go and buy things at a steeper discount. So I think I probably would have slow rolled it, waited, found buying opportunities, bought things as they went on sale versus all at once. But yeah, I probably would have had a few different stock picks. I don't know if I would have bought Starbucks, but maybe that's just hindsight being 2020. So
that probably is a little bit of hindsight for sure. Do you think you would have invested? Last question on here, but do you think? So you mentioned you're a conservative buyer, so you could kind of see that in dividends that you've purchased in a way, right? Do you think you would continue using dividends on the next draft specifically if we have one?
I honestly, I don't think I would. I've been exploring dividends for probably the last like 4 or 5 years, just investing in them and really comparing them to some of the more, ETF returns and stuff like that. And I'll be honest, I haven't found anything that has returned more than just like the S&P 500 or, VOO and things like that. So it's like, man, I don't know, because the whole, what I like about dividends is you continue to not only increase your number of shares, but the number of dividends, grows exponentially. But it's like, it doesn't beat out just the, go with the average. So it's like, I don't know. I'm not like totally saying I'm going to switch from dividend stocks, but I think I would have a more diversified portfolio going forward, and more of a mix between ETFs tracking the S&P 500 and maybe, like Noble, which is another dividend aristocrat tracking ETF, maybe 1 or 2 dividend companies and then kind of leave it at that. I don't think I would go towards the like 90% of my portfolio being dividend play, just because I don't know that it has the overall returns as everything else does. But, again, I continue to learn and explore. But yeah, I think I'm creaking over to the other side a little bit. So.
Okay, because of what you said gave me one more question for you. Like articles you write, the weekly podcast we do, would you still follow investing how you had before overall? Do you feel like the advice you've given is generally how you would follow this again? Or would you change a lot more going forward?
Yeah, I think, at the time, yeah, that's what I believed in. That's what I felt. I think it's still a good strategy. I don't think I think it's a good conservative strategy. I think that if you go dividends going forward, you're very unlikely to lose a lot of capital, but I think in order to maximize profits kind of going forward, it might be worth it to diversify a little bit. I don't think you can just do dividend only. So maybe that's a little bit of a stretch from some previous recommendations, because I've definitely touted the dividends quite a bit, and I still think it's a very good, reliable income source. But being able to diversify a little bit, I think you got to add some different things in there. Maybe there is a part of your portfolio that should have some Bitcoin. Maybe there is some stuff that should be included in there that's not just dividends. Because I think you have to look at your returns with your percent increase, but also your dividend return, and does that outplay some of the other options that are out there? Not always. So.
Yeah, and just to clarify, that is this is the stock draft strategy. We keep the real life strategy, keep it mostly the same, but maybe diversify a little bit more.
Yeah,
that makes sense.
Totally.
Anything else you want to add before I go on to Bradley?
Yeah, I just wanted you to know that 1,100 episodes at 20 minutes apiece with no ads is an hour and 43 minutes a day over 7 months. So I just, that doesn't count like transition from one episode to another or bathroom breaks or anything like that. So I just wanted to throw out a little quick math there for you.
I will say, in Dylan's defense, I mean, what I don't know what the actual stats are, but there's always stuff on the internet. Like, people scroll on their phone for 3 hours a day on social media. So, I mean, an hour and a half a day watching a TV show,
hour and 43 minutes
or whatever, isn't as bad as just like doom scrolling.
This podcast over yet?
But yeah, no, nothing else.
I'm glad you lost, Bradley. First of all, I appreciate you. Thank you so much. A couple things to go off of. Let's start kind of with where we ended with Nick there. What would be your general advice that you have for people with investing? Did this shed like this brand new light for you that you're just like, okay, we need to re-dip into everything? Is there a brand new way I follow my investment strategy, at least with stocks or anything you invested in here?
No. The reason why I say that is like generally I'm like a long-term thinking, and Nick and I have talked about this in the like privately, like, hey, if Tesla spikes up after you buy it in a discount, are you going to sell it? No, I'm not. Now, we'll get into, there's a question we have later today, and I think there's some specific scenarios which you should sell. But here's the scenario of where we started. In February, I think the S&P and the stock market was breaking all-time highs. And then there's like a couple slow weeks, and then there was the few days in April when the stock market just plummeted, and everyone felt like really crappy. We were losing. At that point, it wasn't who was winning better, Nick or I. It was who wasn't losing as bad, But now, like, we're up 3 to 6%. If you calculate that over a year, that's what, over 5 months, 2.4. So multiply it by 2.4. So I'm up over 10%. Nick's up close to 10% in the stock market, which is about how much the stock market goes up on average, is about 10%. So I think this strategy is great. Like, I have, and Nick too, I have a mix of mutual funds, individual stocks. I have a CD, and I have other funds in there with dividends, and it turned out well. And 5 months is a very short term in the stock market. And I feel pretty good. Like, hey, if my stock portfolio went up 6% in 5 months, that's awesome. You're beating the market, You should be at maybe about 4 to 4.5% to be matching the market. So, no, I think my strategy worked.
Awesome. Fantastic. As far as strategy for the game goes, if we were to run this again, is there something in the short term you would change?
I don't know. I mean, I may prioritize Bitcoin earlier on, you know? Like, I feel like I was about to say Bitcoin. Nick was next. He grabbed it from me. But, other than that, not really.
Okay, gotcha. I feel like I won. What's the point,
Yeah.
I don't learn anything even when I win. All right, I got you. I got you. Well, thank you, gentlemen. I appreciate that insight on there. Now, a couple things and this is kind of free form here. We kind of went over, the learning and how you regret things when that comes through. Would you feel like this was overall, and like I said, anyone can go through here, do you feel like you did actually learn something new that you can put forward with like your articles you'll write,
Yeah.
something in our weekly podcast? And what would that be? Like what would be the
I'll
one?
start. I think what
Yeah.
I learned is like we had that dip in April and it felt bad. Not just
Yeah.
with this game, but obviously we have real life stock portfolios. It felt bad, right? And then you start to feel like, did I make mistakes here? And then when you're looking at it with this, this thing we're doing every week, you kind of see like these are mistakes. And I have a lot of this stuff in my own portfolio, if not all of it. And it's like, wow, did I make mistakes? And that short-term mentality is just terrible because right now the stock market is amazing. Like every day it's like new record high, or like goes down a little bit, new record high. And it's like, okay, that's generally how the stock market should work, is over every couple months it'll hit a new record high. And I think what I've learned overall is just like, don't worry about that very short term. I'm not a day trader. I don't know how to day trade, and I would not be successful with it, and I doubt any of us would. Don't worry about it. So I think like don't worry about the short term too much.
All right, perfect. Nick?
Yeah, I had a slightly different learning, maybe just because of the position that I was in, but FOMO is real. You know what I mean? Even in this game,
Yeah.
like when I saw myself losing to Bradley, like even though it's not real, like I wanted to go and rebalance. I wanted to go
Yeah.
and sell something and buy.
Yeah.
You know what I mean? Like I wanted to go and do that just because, even to Bradley's point, 3.5% annualized is getting close to 10%. Like that's not bad. But I still like felt the want to go and change something because I knew there was more to get. And I think that's part of what makes investing so dangerous is you see these other people that, maybe are getting better returns or something like that. It makes you want to go and change it. And sometimes you do just got to kind of stick to a strategy. But yeah, I'd say the psychology of investing, I probably learned through this of like, yeah, man, there was, my emotions made me want to do stuff that probably didn't make sense with investing. So I definitely learned that that can be a big contributor in investing, is that fear and greed and FOMO, all that stuff. So you got to keep those emotions in check.
Yep.
It's kind of weird, like even having FOMO in like this fake scenario, but we're pretty competitive guys here, so it makes sense having that even in a fake thing. Like, who wants to be second place? I mean, Nick, you did really good at it, but yeah, so yeah, it's
Nick,
good.
there's what, like almost 8 billion people in the world, and you came in second.
Right.
That's pretty dang good.
God.
You will never be the winner of the first one going forward, no matter how many you win. So that's
you guys
really
are
awesome.
killing me right now.
Hour 42 a day, by the way. And so, all right. Well, thank you guys. I appreciate that. Going forward on here, reason why I asked, because I wouldn't be surprised if we can look forward to another, maybe a draft or a new game we play each week. I know we've already been started talking about that, so look forward. Nothing to announce today, but I definitely want to put that on people's radar. So look forward to more. So going forward on here, we're going to the later half of the episode. We're talking about more what if scenarios. This can be an open forum for everybody to start us off with, unless is someone just raring to go first, because I got a couple questions to go over.
I kind of want to hear the question first before I volunteer.
Ah, dang it. All right. All right. Well, Nick, you get to go first then, no matter what. I appreciate you. All right. So first question I got for you. This is a scenario. I'm going to present it to you, and I want your some advice on there, and we'll go into the details. Pretty much something we've done before. This is some real-world examples on how you would operate this. I bought some stocks that jumped 50% in the past couple months. I'm not sure if it'll go higher. but it could drop. Do you think I should sell it now and pay the high taxes, or wait a year, but risk the losses? What's your thoughts?
Boy, yeah. I think it depends on a couple different things. You know, when you're looking at an average increase of 10% per year, if something goes up really high, it could definitely fall down. And so I think that it, in my mind, it kind of depends on why the stock went up. If the stock went up because the company reported really good earnings and they've got a really good trajectory, it might be worth it to just hang on to it. Now, if the stock just went really high for no reason, it's just a popular stock, or maybe it's a rumor or something like that, and it's more likely to drop down. Maybe the price to earning ratio has been, greatly inflated. I think the difference between long-term gains tax and regular short-term gains tax is like 7% for most people. So really what you're risking by holding it is 7%. So if you have a greater risk than that dropping, it might be worth it to sell today and pay a little bit of a higher tax rate versus holding for a year. So yeah, I'd say if it's a risky bet, maybe it is worth considering. If it's more of a blue chip, and it's just it was an undervalued stock that went back up to normal, or it's an ETF like VU or something like that, maybe hang on to it. It's got less of a chance of dropping. But yeah, if it's risky, I'd probably say consider selling, taking those gains and just holding back some of the profit for the taxes.
Makes perfect sense. Bradley, do you want me to repeat it, or are you good?
No, you don't have to repeat it.
Okay.
So I thought about two stocks that have done something like this. GameStop, obviously. And
the GOAT.
In that scenario, if people held on to GameStop, 50% is tiny compared to what it went up. Like, yeah, you should have sold, right? Now, generally, my other thought is if it jumps 50% in just a couple of months, it's probably a volatile stock in general, right? Volatile doesn't just mean bad, it could mean volatile good. Now, another volatile stock that I know that has hit stuff like this is Tesla. And Tesla has jumped 50% in just a couple of months, probably this year, So my general thought is always just like, hold on to it. But if you make a move that I probably wouldn't advise and buy like super volatile stocks like GameStop and it pops up 50%, sell it, pay the taxes, sell it, and, increase your money just get it over with. But if it's a real company that has a real future, I would hold on to it and hold on to it for years, Because you're right, Nick, like over a year, it'll probably settle a little, but over 10 years, it'll probably go way above that 50%. So if you're in like this, if you have a lot of cash in, a really volatile stock, a move you probably shouldn't have made in the first place, I would say I would cash out. If it's just like a regular company or something like Tesla, which is still pretty volatile, keep it, hold it, see where it can go.
Dylan's doing the thing
my
where
bad.
You're good.
Yeah, my bad. I had to sneeze there in a little bit, and I forgot to unmute. With this, do you think, to me, and just to kind of put a cap on everything, there's nuance to this. It's not always a guaranteed. You should hang on to your long-term stocks if you're, mostly because you could be day trading, could be something. Maybe you're doing something where it's what Nick brought about, where there's something just announced and you may want to cap it off there. There's just nuance to it. So as always, it's not a guaranteed what it should be. Understand why you're investing into it and understand what's next for the investments you're putting into. I think is the good point to have there.
I'll like, it kind of goes back to the dividend conversation that Nick was having. One positive of dividends is that if you hold on to a dividend stock, let's say for 5-10 years, then it's just putting cash back into your portfolio. You can use that cash to buy other stuff, ultimately called compound interest if what you're buying also grows. You can also put that dividend into the same stock and or same fund, hope they keep that dividend rate, and then each dividend payout they give you increases every time, thereby increasing 10 years. You're like, okay, now I'm going to put that money to buy something. So that's where it's something like, if you have some extra cash in your portfolio from good moves that you've done, you don't necessarily have to sell to get good cash. You can use a dividend strategy to get cash, which is cool because I don't really sell in my portfolio. I haven't in a couple years, but but even if I'm not putting money from paychecks into it, it's growing, not just through growth, but through dividends, inserting cash, whether it's quarterly, yearly, or monthly. So like with this scenario, if you had some extra cash, maybe, sell it, and if it's a risky stock.
Okay, perfect. Thank you for that. Now, Bradley, since you left us off there, I'm going to actually start with you with our second what if scenario. So, me and my friends and family want to make a big investment, and they want to bring me along into it. Should I invest with them or keep it to myself? Do I ask any questions? What am I doing?
Well, yes, you should ask questions.
You'd be surprised.
Generally, I would probably say no. I would say keep it to yourself. Now, it depends on what it is and who this family member is, but I would generally say, like, how important is money to you and how important is family to you? Like, generally, I wouldn't loan money to friends or family members. I may give money to a friend or family member, and I'm not trying to sound like super charitable, but like if I loan, so Nick, let's say you're short in cash, you're like, can you loan me $1,000? I would probably say no, but here's $1,000, take it, let's never talk about it again. You don't owe me anything, I'm not better than you. But if I'm sitting here waiting for you to pay me back in 2 years, I don't feel comfortable, and you probably don't feel comfortable. So generally I'd say stay out of it with friends and family. Now, if it's a big investment, probably, why do they want to bring me along is a question I would have. Do they just need someone to fund this project, and that's me? Do they just want to be equal partners with me? Like, what is the project? If it's real estate and we're looking to break this up, like, how much do I trust that person? Like, if that person goes bankrupt, am I willing to take on 100% of this investment? I would lean towards no. I wouldn't invest on a big investment with my friends and family.
Okay. So it sounds like, one, it could overall be a bad investment strategy, and you don't ruin the relationship with your family.
Yeah, I would rather miss out on money than hurt my relationship with my family,
Okay, that makes sense. And Nick, same question to you. Are you investing with your friends and family?
Yeah, I think first of all, Bradley, can I have $1,000? Is what I took from that.
You're like, I know you'll just give it to me.
Yeah,
no strings
and I don't have to pay it back, and you're not even better than me for it. Like, I love that.
I have, but cash, if you can see from the stock scenario, I know you need it. So.
Dang it! Oh man,
second place, by the way.
Yeah, second place. If you didn't remember. No, but I think I agree with Bradley on the it's usually a bad move to get into business, I think, with family. Friends, I think I'm more of like a gray area, just because I don't know if you guys have heard the 2 beers and a dog analogy, but it's basically like, would you have 2 beers with this person, and then would you let them watch your dog? And if the answer is yes to both of those are like really good people. Depending on who it is that you're getting in, and the 2 beers thing, like, you probably don't want to get into business with somebody you wouldn't have 2 beers with, because you're going to not like working with them. But I think if you've got somebody that, kind of fits some of those criteria, I would say maybe check it out. Maybe look and see. I wouldn't do any sort of like handshake deal type stuff. I would make sure there's terms written out, notarized, like agreed upon. Consider is it an LLC type situation, sole proprietorship? Like how is the business deal going to be structured, and having some of those things in place. But I think if those things check the boxes and the business makes sense, I'm thinking to Bradley's point, like why would you want to bring somebody on? Maybe it minimizes some of the risk. It kind of spreads it out a little bit so no one person is taking on too much risk, which I can kind of understand that. So I'd say I'd consider it, but to Bradley's point, I'd probably be a little bit cautious and kind of make sure some of those boxes are checked before just jumping in and being like, here's my money, and then getting mad when you lose it all. So don't invest in anything that you can't afford to lose, type of thing.
Yeah, I will say from personal experience, I don't make big investments or loan money to friends and family, but like going into business, like I'm a partial owner with my brother, with Sasquatch Gun Oil. Like we're third owners with our other business partner, but it wasn't like I don't owe him anything. I don't like if let's say he had to quit, it would be okay because it's a business running, and it's different than like, let's just go buy this property and take out a huge loan together. We didn't have that. And that's where it was like different. It was like, there's no like financial strings attached, but there could be in the future, and we'll have to make that decision as business partners, not as brothers, if that makes sense.
That does. So, I mean, it kind of be a little bit of a nuanced scenario.
Yeah.
We may not want to make sure. But in general, I think it's probably best not to. I think especially with friends, you don't want to do that. I think we've all had that scenario in our lives for sure. Gentlemen, anything you want to add to this? Anything on top of what we talked about before I move on?
I don't know. Like the more I think about it, the more I'm like I lean towards no. Like if it's just straight up cash. But let's say like Nick and I wanted to buy an apartment building, together. Like I might do that with Nick, So I don't know. No,
he is
yes.
Maybe, definitely maybe.
I mean, he's the second best stock investment draft player we've got.
Yeah.
What's better than second, Bradley? Do you know?
Jeez.
Think you got a good idea. So, all right, cool. Well, I appreciate that, gentlemen. And well, I mean, I feel like you just said the same thing again, Bradley. It's just nuance, right?
Yeah.
Like that once again, Nick probably could be someone to be good investment partner with. It just depends on who you are.
Yeah.
But there's also a difference between you two being friends and how much we've worked together and seeing like patterns of behavior we can do so too.
Yeah.
All right. Thank you both. Appreciate that. Nick, I'm going to pass it to you to start us off with question 3. I need money now. Besides calling JG Wentworth, should I cash out my 401k or take out a loan? What's the better strategy here? Is there nuance to this too? What am I doing? I'm scared.
Yeah, no. I've come across this situation a lot where people like they've been forced into a 401k or something like that. A company defaulted a contribution or some sort of a match, and they work at a company for a couple of years and maybe have a couple $1,000, maybe $10,000 saved up, and life happens and they're like, wow, can I access some of this? And typically you have one of two options. You can either take out a loan for, I think most places are like 50% of the value, and you pay usually an above prime interest rate on it, maybe even a little bit higher than that. I think the last one I checked was running like 10% interest on it. And the alternative is you can take a withdrawal, which I know each company does a little different. Some have requirements of like you have to leave or have hardship and stuff like that. But most withdrawals have, taxes plus a 10% early withdrawal fee that the government imposes if you're under like 60 years old. I think where people get a little bit confused, because I've seen if I take a loan against it, I pay myself back the interest, right? And it almost seems enticing to people to be like, hey, I'll pay 10%, but I pay it back to myself. Yeah, like it's me. It's cool. It's like a free loan. And it actually drives me crazy because It's not like 401k is pre-tax contributions. You repay a loan with after-tax contributions. And so if I take out a loan for $10,000, that loan costs me with interest, let's say $13,000 to pay it back. But how much do I have to make before taxes to earn $13,000 to pay that loan? I probably have to make like 20 grand. And so like $20,000 of my pre-tax money is actually going towards this $10,000 pre-tax like loan type of thing. And so I don't think people realize how big of a difference it is from your contributions before tax to repayment after tax. Like it's a huge thing. So like, well, I wouldn't necessarily recommend a withdrawal. Like, I don't know, a withdrawal might be better in the circumstances, depending on what you've got going on, versus taking out a loan and repaying it back with after-tax contributions. Because you could just, I guess you could just do that anyways. I don't know. I don't love either one, but I don't think the loan option is like the freebie that a lot of people think it is, just because of how much you're like 10% is crazy, but then considering it's after-tax repayments, I don't know. That just seems like, why would anybody make that move? Just go get a regular loan that you don't have to.
I was gonna
do that
ask
with.
you, Nick. What about like a third scenario of taking out a loan from the bank? Like you don't loan out your 401k. You could withdraw, loan your 401k, or take a loan out from the bank. Would you do that?
Yeah, I mean, I think would you end up paying the same price overall though? Because you're still repaying the bank loan with after-tax contributions too. You know what I mean? Like, or after-tax funds that you're getting.
Mm-hmm.
I wonder if you're basically paying back the same amount. But I would imagine that a bank loan, depending on if it's secured or not secured, might give you a better interest rate.
Yeah.
I don't know. I feel like most people don't look at the interest rate on a 401k loan because they're like, oh, I'm just getting that interest rate back to myself. But if the interest rate's better, maybe a traditional loan might be the better route to go.
Well, I'll just jump in, and I think this would be a great question for Carrie, like is kind of like the loan expert, and she did this a lot when she worked at the credit union. I'm trying to think, like, what would Carrie do, like, if we had this? I think Carrie would probably say, like, let's take out a loan from like our credit union, not just from like some gangster on our car, right? Not at like some cash now place that has crazy interest, but like from your credit union. Like, let's say, we have our car's worth 40 grand. We're like, hey, let's take out a very low interest, and some of them might be like zero interest for 2 years on your car. And then, like, this is assuming I need cash now, right? Like, you have to get this money somehow. I think that could be a good scenario, is like, let me pull out some money, a secured loan through my credit union on my car for, I don't know, 10, 15, 20 grand, pay it back with over 2 years or whatever with zero to very low interest. And yes, I had to take my income out, but in the end, that might end up being better than messing around with crazy taxes with a 401k, or like having to deal with, paying yourself back and like the pre-tax. I don't know. So I might go option C. What do you think, Nick?
I like option C a lot better, especially,
Yeah.
I mean, if you're in a situation where you have some equity in like a car or even a home or something like that and can get a low interest loan, that might just be better. It's gonna be cheaper. It'll keep your money invested. Doesn't, if you take out a withdrawal or a loan during the wrong time, you could miss out on a ton of growth. So I like option C a lot better.
I know you didn't ask option C, Glenn, but I think it could be a good option. I'll have to ask Carrie afterwards and see what she thinks, because we've done stuff like that, like to consolidate, like when we had credit card debt and stuff. Like, let's consolidate this through our bank, through a secured loan, through like on our car. So yes, we now had a car payment, which we didn't have because it was paid off, but I don't have like all these separate payments. It's at a cheaper rate, and I'm gonna have to pay this crap anyways. And it ended up working, and it kind of got us out of debt. obviously good spending habits and
Sure.
having a good job. But I think like if you're in an emergency situation, don't go to like one of those cash now places or call JG Wentworth,
JG Jetworth.
JG Jetworth,
The
or
great
I
value
probably
guy.
would avoid touching my 401k like forever. Like until I'm 60, I don't think I'll ever touch my 401k unless it's like last resort.
Perfect.
Like it.
I the only buy now pay later thing that I would ever invest in is definitely what was it, DoorDash with their,
Yeah. Get your
Finance
meal
a
today, pay it
McDouble.
later.
yeah. I'm still baffled they have
Yeah.
that. Did they ever follow through with that? I think I ask this every time I bring it up. Did
I
they ever go
haven't
through?
heard much since they officially announced it, and I don't know if they're still working on it or what.
Probably not. It's such a scam. It's
Yeah.
crazy. Anyway, the how'd you get into credit card debt? School? Nah, DoorDash. It's
Yeah.
crazy. I don't know. Okay,
The
cool.
McRib came back. Head of it.
No, it's a snack wrap now,
Yeah,
baby.
snack wraps
Oh
are back.
yeah.
Yeah. Oh yeah. No, that's not good, Nick. All right, gentlemen, let's close this out for today. In general, anything you want to talk about. So I'll start us off with this, where I want to say once again, we're already starting to talk about our new I guess game we're going to start playing. So stay tuned for that. I think that's something to look forward to with the site. We have new articles being written. Bradley keeps it up to date, new editions almost every time. Nick still around. I know it's crazy, and we're definitely really invested into making this the long term thing. So future looking bright for FF, and I think a lot of what we're doing with the podcast and a lot of things. I just
New
want to shout out.
gear.
It's really cool. Oh yeah, New Gear. Show
Yeah.
the shirt. We can't see
Got the
the
shirt.
logo on it. Yeah,
It's on the
looks
back
great.
too, but
Yeah, looks good.
back
Yeah, we don't
logo.
need a 360. It's all good. We appreciate that. So I think there might be some opportunities even getting merch if you all wanted to at some point. So in the long term, things are looking good. We appreciate everyone that's been joining us for this journey. Nick, talk about anything you want to close us out with.
Yeah, no, I'm excited where the site's been going, and these podcasts. I've been loving spending time with you guys and kind of talking finances and stuff. As we continue to evolve the channel and everything, I'd love to get some viewer participation and stuff like
Yeah.
that. Maybe get some like questions and suggestions, recommendations, stuff like that. So I'd love to see more of that type of stuff, and even just feedback and stuff like that from viewers to continue to really enhance financial literacy. I think that's what this whole thing's been about, is helping people learn what options are out there, not necessarily telling them what to invest in, but just what options they have to invest and how to get smarter and more educated themselves. So whatever way does that the best for people, I'm loving it, and hoping to continue to share whatever knowledge that we have, and help people become more financially independent. So I'm digging it.
Perfect. Appreciate that. Bradley, close us out.
So looking over the results again. No, I'm just kidding. I will say, like with our stock investment draft, like some things that were pretty slow growth, like FZ Rocks, which is a mutual fund which follows the S&P 500, up 3.62%. And that's a little under the 10% that the market should grow every year. Ford was up 28, almost 29% plus dividends. So I think like FOMO, like Nick said, is real. Like, oh, how do I like sell this to get this? Like in the end, like in a year from now, like we could look at these numbers. Nick could be up 3% over me, and then 2 years I could be up 3% over him, and like go back and forth. Like none of the stuff we got is super crazy. Like it's all stuff a lot of people probably have in their portfolio. So I think that's one to think about. Also, the inflation report comes out in 2 days, I think. And this is like the jobs report came out like about 10 days ago or so.
Yep.
And like jobs are looking better. Inflation, like mortgage rates are slowly going down, but the Federal Reserve doesn't want to drop rates. So it's like things are actually looking pretty solid in the economy. Like gas prices are down, egg prices are down. Now, other stuff that's not volatile will always go up, but it'll go up slower. So looking at the inflation rate, keep an eye out to see our report on it in a couple of days. I'm hoping it's good for June, but like the economy like feels comfortable as long as jobs don't fall off, which we had a pretty good job report last week, so we're looking good. So like feel comfortable. All the people who scared you a couple months ago are liars, and yeah.
You're gonna keep bringing that one home, aren't you?
Yeah. Until like someone holds them accountable, I'll hold them accountable.
It is a very good point. I know, sorry to tangent, but to just constantly throw out that it's what we talked about when we initially had like the crash of the stock market, where the tariffs were like Bradley's favorite word, by the way, like all of those were like hot and heavy, and then we had the loss of everything, and we're like, just stay calm, just hold, it'll be okay. And I think all of us here at the podcast, we all bought during that time and got a good discount on a lot of things. So that was great to do. I mean, we just utilized.
Like, what's going on? Is Elon fighting with Trump? Buy.
Again.
Is Trump saying the word tariff? Buy.
Again. Classic. Hey, we're on sale, baby. Let's go. Yeah, no, I mean, it's definitely, in sincerity, it's just we took the lessons we learned from, I think, COVID. And just was like, all right, well, now's not the time to panic sell. Now's the time to panic buy. No, I'm just kidding. Don't panic buy. I'm just kidding. Gentlemen, I appreciate your time today. It was a great episode, I think. I'm looking forward to the future of the podcast, the website. So thank you very much. Have a great day, everybody. This was, once again, the episode 26 of the FF Podcast. Have a good morning, afternoon, and evening. Thank you once again. Enjoy the rest of your day. See ya.
Bye.